Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. All right, so I got a fresh cup of coffee here going. Ethiopian medium roast. Good stuff. Good to see everybody. It is a caution day today. We've got a lot of different events happening. We've got like a triple header, if you think about it. We've got OPEC meetings. So those of you in oil stocks and oil, like myself, OPEC meeting. Right now, the early chatter is that there is not going to be a production output increase. So staying pretty bullish crude or just sort of neutral to bullish crude makes a lot of sense going into that meeting. There's probably going to be a lot of trading opportunities fading these surges that we're going to see up and down. But overall, we want to stick with the overall trend of crude, which is choppy, yes, but the preceding trend was up. So let's stay with that bullish bias. That's worked for us really, really well on the future side in the futures room. What's the other thing we've got coming up? Of course, Powell. And the place that I'm looking most intently is rates, because we've got a 1, 2, 3. So this is very reminiscent for those of you that are familiar with, I have an image here. All right, let me show you this image. Okay, so this is the plain Jane Dow 1, 2, 3 scenario. All right, 1, 2, 3. But what I'm also looking at, and I don't know that I have the image, maybe I do. There we go. I'm also looking for a lot of times what you'll see, and you can see this inside the 1, 2, 3, is a bullish Gartley. Now, don't worry about this. Oh my gosh, Rog, that looks like geometry. I was awful at geometry. That's not what we're talking about here. But if you extract all the Fibonacci stuff out of it, you will see a 1, 2, 3 in here. But a lot of times we might get a pullback. Now, this is not a strict Gartley that I'm talking about, but don't be surprised if the market pulls back a little bit before it starts to take off. And I think that's pretty much what we're looking at. 1, 2, 3, markets are consolidating. I'm still quite bullish. And some of you who've been following what I've been chatting about regarding copper gold ratio. And yes, I want nothing to do with copper in terms of this pullback. I got a lot of emails about it. Rog, what are we gonna do with this pullback in copper? We'll do what we did in the middle of April, which is buy this thing, enjoy the ride higher. We put a quarter in this machine a long time ago. This move is now consensus. Leave it alone, gang. Leave it alone for now. So copper gold ratio is a pretty interesting way to look at what's going to happen with rates. And I am looking for TLT, ZB, ZN to move higher. So that's some general stuff we've got going on. So caution day, OPEC. So why OPEC? Powell, as I endearingly call him. I don't like to be short in front of Powell. And after Powell, all bets are off. Remember, the press conference is at 2:30. And finally, we do have Biden. So we have a triple header in terms of different reasons. Oh, yeah, and this little thing called earnings season. We have Microsoft. We had the Googles yesterday. So we've got a lot going on in terms of what the markets are going to have to digest. It's an all-you-can-eat buffet of, well, shenanigans. All right, so let's get to it. Questions. Jacques asks, I see soybeans and corn had a sell-off last night. What is your consensus? What is my thought on this? It's consensus. Jacques. So again, reminder, CORN and ZC. There's no other way to put it. This is sheeple time. This is consensus time. I don't say that in any flattering way. What I mean is it's obvious, right? People who have never looked at corn, suddenly they're corn experts. Right now, they're going to start trading corn. This trade was a trade in March. It was a trade in early April. And when you look further out, in fact, what's going to happen for me personally is the contract that I'm in, which is the May contract. I'm going to have to get out of this May contract. And let me give you guys an idea of why I am not interested in these trades right now. Yes, I've been talking about reflation. You'll notice the free video last night. I'm actually looking in a different place now. And I'm encouraging those of you in both futures and in equities, options, ETFs to look at some other places. Again, this trade in corn was fantastic. I mean, where it sits right now per contract, Take a peek. That's a 62, actually, right there. It's about a 65, 68, $7,000 move, depending on where in the wave you got long. This move is done, gang. Consensus is almost always going to be most easy to recognize, meaning everybody knows about it, and they're going to scramble in playing the Momo game. Once you see the market go parabolic, you can see my 8 EMAs are lit up. This is not a fun place to engage corn. At the highs, no way. And I love that you're keeping an eye on this market there, Jacques. Soybeans, same story. Copper, same story. So now we've got to shift our attention to where they're not looking and start to think about, yeah, these are still probably buyable, but I would be a whole lot more careful about it because of the shift in the attention. Now I want to see where the attention is not. Are there some possible accelerations from here? Yeah, there probably will be. But I think the easy and frankly, the best money in these reflation trades are going to have to reset. So we went parabolic in here and we reset. Going to go parabolic again. I probably think we're going to reset. I am not bearish these. I do think commodities have a whole lot more upside. And I don't want to use terminology like super cycle, but gang, I think we're probably still looking at a lot more strength in commodities. Hey there, Phil. Good morning. I was impressed by it. Oh, very cool. Great to have you. Great to have you. All right. Next up. Hey there, James. Boeing. Boeing. I think if I recall, Tammy, our Fibonacci princess, had a breakdown on Boeing. And I love fib work. Tammy and both the Fib Queen Carolyn have exceptional world-class fib work. And I think they had broken this down. So definitely check that out in the free videos, James. But for me, this is a market that's gone yellow. You can see here at the very bottom, it's a market that's gone yellow. We can easily compare Boeing to, say, the XLI or even the DIA. So I want to do this because is Boeing a relative outperformer right now? It is not, right? So think about where Boeing sits within the pool of stocks that it trades with. And Boeing, for me, is not an impressive name in terms of the trend. Now, let's take the trend out of it. Let's look at the preceding trend, which was up. Got all this double green that preceded the yellow. So I still have bullish bias on Boeing. So what I want to do is turn on a slow stochastic. I want to turn on a ready aim fire, some sort of oscillator that's going to give me an oversold reading to take advantage of a resumption higher. Maybe it's a Darvis, maybe it's a volume ledge, right? So there's a lot of things we can do to build a long position, and I'm not looking short, build a long position off what was a broken trend. Broken trends become distribution. Distribution is about where are those either 1, 2, 3 continuations? Where could we see the lower end of the range and buy off that? How can we confirm the lower end of the range? Slow stochastic, ready aim fire. So, the other thing to remember is of all the stocks we could focus on, usually what I'm going to recommend are names that are tracking with the broader averages, that are tracking with their sectors, and that are right now relative outperformers. All right, next up, what are my thoughts on Amazon? Sure. So we have earnings coming up. So gang, let me break down a couple things about earnings. All right, so if you're asking me about earnings and you look at a stock that's inside a week, my earnings play is done, okay? I would highly recommend if you guys are interested in earnings inside of 1 week, execute a different kind of strategy. You're going to be looking at different types of premium collection. My focus are debits. My focus are directional plays. That's been the crux, the foundation of my career for 30 plus years. So for me, that very binary inside 1 week high IV scenario, I don't want to engage in that at all. If anything, I do want to focus on overall that trend preceding earnings starting 6 weeks out. So for here in Amazon, you've got to focus on credit collection. It's not going to be something that I'll do at this point. All right. And if a few folks ask me about the split rumors and so forth, right now, Amazon really isn't on my radar. I mean, you can look at XLY. I think XLY looks better than Amazon. XLY is an ETF where Amazon is about 25% of the weighting. I think there's more interesting things going on in the broader XLY than actually Amazon. So it doesn't mean, hear me out, it doesn't mean that I'm saying there's no setup, but for me, this is not a pitch that I'm going to take a swing at. All right. Does UPS look good up here? Again, big move. Where it is right now, I'm not going to play it up there. No. Thoughts on Exxon? So, by the way, any market that's right in front of earnings, gang, realize you're playing a very binary game. You're going to be either really right or really wrong most of the time. Sometimes earnings are so flat that there may not be much movement, and that's fine. That's fine too. But keep in mind that the psychology around earnings is like a shockwave. It's a high impact event. And again, I think the better trades are going to be in markets that are already trending 4 to 6 weeks out. By the way, gang, in the so those of you that are wondering, okay, Rag, I get it. You're not going to play something inside of a week. You got it. However, check out the free videos over at the Simpler Trading YouTube channel, and you will see there's a video called Tail Wags the Dog. That's the way I look at earnings. Individual stocks can have outsized impact on sectors and on indices. So check out that Tail Wags the Dog. I lay out my earnings. And then if you want to take another deep dive, check out over at countdowntrader.com. Those of you with the earnings questions, you guys are going to love this update. And I love that we got this update out there. Big kudos to Trish, my right hand here in the office. Said, you know what, the 642, we're getting a lot of questions about it. Let's explain it. And there you go. So this is the way that I've been looking at earnings for pretty much my entire career. High impact events have high volume, high volatility, lots of attention, and all that goes together. And so how do you treat these particular zones? And I explain where I don't want to be trading them right on top of the event. I want to be setting up in front of the event. Not that different. For example, we've got that major economic event by way of OPEC and crude oil. My expectation was we're not going to see higher output. That's not been what they've been signaling. And so that's pretty bullish for crude. We got long in front of the event. I don't want to trade the OPEC hot zone, right? I want to be situated in front of that event. So we're always counting down to specific events, right? And I think a lot of times the prelude to the event, well in advance, is some of where the quote unquote easy money can be made. All right. So Exxon, I think, is going to set up pretty well, possibly for a squeeze. I'd keep an eye on that, Deborah. Yeah, just an explosion out of this consolidation that we're in with a bullish bias, All right. Let's see. What else do we have here? Where am I in terms of crude long term? Can I see those first probability charts? I'm not sure what you meant by that, Jennifer, but what's my target for crude longer term? My target for crude longer term initially is going to be, let's get back up to about 67.70. Let's get back to those highs. I mean, that's a good place to look longer term. Initially, about 64.40. Longer term, retest the highs. Longer term. So now we're talking T3, maybe T2, T3, brand new highs. But I'm not going to assume that. Notice I'm talking T2, T3. I don't expect the market to necessarily get to a T2 or T3, target 1, target 2, target 3. I do expect to get to the first target. Then I can move to a break even, and then I can see how high is high. So I hope that and if you want to, really lengthen out your expectations, take a look at a weekly time frame. If you want bigger picture time horizon type targets, go out to a longer term time frame chart. All right, so let's see here. Gary asks, can I please explain the dots, red, green, the bottom of the chart? Yeah, so what's on my chart? These are volume levels. I'm very uninterested in time-based volume. If we had higher volume in a specific day, I don't care. It's mildly useful. What I'm more interested in is volume in a particular price. That's known as volume profile. That's what sits along the vertical axis, the gray, what I call the volume ledges, point of control, value area high, value area low. That's what sits along the hard right edge of my chart. Along the bottom is known as the JT multi-trend. This is a study where I can compare two symbols and their respective structures of the 8, 13, 21, and 34 EMAs. The first row for the symbol, the top row, is the way in which the 8, 13, and 21 are organized, bullish, bearish, or neutral. The bottom is the 34, bullish, bearish, neutral. That's why we have two different pair of symbols, whatever might be down there, triangles, squares, circles, but a pair for each symbol, 8, 13, 21, and 34. When I refer to double green, that's because both the 8, 13, 21, which is a much better measurement of sentiment and momentum, that's green, that's bullish, while the 34, which is a much better look at the trend itself, that's also bullish. So when I refer to double green, it's those four exponential moving averages. All right, let's see. What else do we have here? And thank you for the question. Bear with me, gang. Wheat. Question on wheat. So wheat is going to be very much a conversation that is going to run parallel with beans and corn. It's gone exponential. Gone parabolic. And so I'm going to have to wait for a pretty reasonable pullback. How could I do that? Well, I could just look at the last swing high to swing low. And I wouldn't even start the conversation until 382, but preferably a 50%. So if we get down to 681, that might be an interesting level for me on wheat. Until then, be very cautious with parabolic markets. Parabolic markets are tricky because the first few explosions higher get a lot of attention, and people are comfortable buying new highs. That's just the way retail trading works. People are very comfortable buying new highs. Then, because they're oftentimes rewarded, because they're not the first wave of that momentum, they get rewarded and they'll keep doing it until something like yesterday happens. And then today, same thing what's happening with copper. That's where parabolic markets are very tricky to trade. If you're one of the first traders when the market initially explodes, and that would probably be as we took out this Darvas zone around 672, 671. If you're in early to the parabolic party, and it is a party, don't get me wrong, but you've got to be in early before the market goes fully parabolic. And that's where that breach of the Darvas, before we start to go exceedingly accelerated, that's where you can make some money. If you start getting into that late, now that's the problem. You're going to end up with situations like wheat, and then you've got to wait for a more significant pullback. So thanks for the question. I think it's one that a lot of people are looking at on these grains right now. But please, the issue with looking at grains now is, gang, that move was a March move, was an April move. It's not a May move right now. We might see higher highs, but like I'm not trying to dishearten anybody, but I'm trying to tell folks, don't let the consensus, don't let the broader markets tell you now this is the time to focus on this, because broader markets are always going to want to see a market really accelerated. The move is already done. Oftentimes, the big move. It's look in places where, if you're not a momentum trader and you want to take advantage of these pullbacks and you want to build options positions when they're not expensive, look where everyone's not talking. All right. Great place right now. Everyone was talking about energy and energy stocks. Now it's gotten very quiet. That's why I'm looking at this stuff again now. But we're not there yet. This is going to have to benefit from some rotation. I like looking at that stuff now, but the timing isn't quite there yet. Rotation requires that a kind of an overcooked market gets taken off the burner, if you will, a little less interest. And then rotation is always what's going to move lower while something else moves higher, right? So we lose interest in something that's at significant highs where it makes very little sense for big money to move into these particular sectors at the highs they're at. And then what do? They go bargain hunting. They go shopping. They go look for things that are laggards. We saw this in a very pronounced way when the market started rotating into energies and financials back in 2020. And those had been the laggards. They had been the dumpster fires of what was a market that was in fuego. XLF, XLE did not benefit from most of that summer rally last year. And then all of a sudden, when rotation happened, guess what? Where the money went? Not more into these parabolic names that have been, moving higher for 4.5 months. They went into the things that were lagging. So there is a you should always have a list of laggards. Not that that's where you want to go, right? Simply, bottom hunting and bargain hunting is not where you want to be, but you got to remember that's how rotation is going to work. All right, so Roku, sure. Maybe a 1, 2, 3 on Roku, a little early, too close to earnings, and no trend. So Roku's interesting potentially, but I'm not interested in it now. No, it's in an interesting volume area, but again, the proximity to earnings is a little closer than I'd like. And we're trying to complete a 1, 2, 3, which has not completed. And if you're looking for where it is, this is it. 1, 2, 3. I need a break through that Darvis level. That's what I need. I need a break through this Darvis level. And until that happens, I don't have a completed 1, 2, 3. Now, if you're wondering, okay, wait a minute, what about that Gartley? That Gartley would probably kick in down in here around 330. So if you said, Rog, we're trading 332, 330, that might be interesting, where what will happen instead is the market will do something more like this, right? And then it'll move higher. So you might see a lower low. That's how a Gartley would work. That's a more harmonic pattern, but it's sort of inside this classic century plus old 1, 2, 3 pattern. All right. Now, those of you that are harmonic say, Rob, this is such heresy because you're not pulling the fib levels between. That's true. I'm not, because I don't want to, blow the top of people's heads. But if you're interested in a pattern like that, yes, you can get a whole lot more granular about what needs to happen for that to truly be a harmonic pattern, for sure. Okay. So thanks for the question. Are these indicators free? Yes, we make these free to members. Yes. So there's a lot of tools that I make free to members. I have one premium indicator package, and that's the V-Score, V-Profile, anchored VWAP. Everything else I make available to members. Okay, so let me wrap up here because I just took a glance at the clock and I realized that that I am running over. I apologize for that. Directional exhaustion is my style. Good old El Toro Loco. I love that. Directional exhaustion is my style. Yes, I'm a trend follower. I like playing pullbacks within high quality trends. That's what I want. And high quality trends, those are defined by those moving averages, by my grab candles. Retracements are defined by the wave, Fibonacci levels, and other EMAs. You add in some volume ledges and some anchored volume weighted average price, so you can factor in volume along with price. And yeah, that you've got the gist of what I do. Okay. All right. So you'll notice that in the comments, we have a lot of the links that I mentioned that you guys can check out. We make a lot of amazing information available at the Simpler Trading YouTube channel and Facebook page. We have some of the training videos, whether that be how to put on certain types of positions, how to position size. We have those are some of the recent videos that are there from some of the folks in our training room. So check that out. As always, thanks for joining me for Charts and Coffee. I'll see you guys tomorrow. Remember to caution day, gang, triple header, OPEC, Kapow, Biden. We got a lot going on today. Be careful, but I think it should be an interesting one. All right, gang, be good to each other. I'll see you tomorrow.